So if you own your own business, there's going to be costs involved. You're going to have expenses, you're going to have purchases, things like insurance, rent, paying for your employees, utilities, advertising, and things like that. But it's important both for your income taxes and for accounting purposes to make sure that you are categorizing those purchases correctly, because there's a difference between business expenses and capitalized assets. So in order for a purchase or a cost to be classified as a capitalized asset rather than just a regular business expense, there's a few different criteria that need to be met in order to classify it as a capitalized asset. And when you have it capitalized as an asset, it's treated differently, and that's where there's annual depreciation on the asset rather than just classifying as a one-time expense. So the three main criteria that you'll want to look at to determine if something is just a business expense compared to a capitalized asset would be, number one, the price of the purchase. And that threshold will vary a little bit depending on the nature of the business and the region that your business operates in. It could be as low as $500 if you're in the US or Canada. It could be much higher than that. But I would say a pretty standard threshold would be maybe around $1,000. So if you're purchasing something that is below $1,000, it's just going to be an expense. It's not valuable enough to be considered an asset. So that's the first criteria. The second one would be that it has a pretty long useful life, so at least a year. If it's just something that you're going to use for 6 months and then it's no longer useful, then the useful life isn't long enough to categorize it as a capitalized asset. And then the third criteria is that it's actually either a physical asset, physical property, or intellectual property. So something physical obviously would be like a computer. Something intellectual property could be just like software. So if you make a purchase and it meets all three criteria, meaning it meets that financial threshold where it's more than $500 or $1,000 or $2,000 or whatever you choose for your threshold. Number two, it has a useful life of at least a year. And number three, it actually is an asset, either physical property or intellectual property. If it meets all three of those, then you can capitalize it as an asset. It's not just an expense, and then you just claim depreciation each year on that asset. And there are different types of assets that have different levels of depreciation or different methods to calculate that annually. So I'm just going to give you a quick example here to show you what that looks like. So I have just a notebook here that I purchased, and for the criteria, for starters, the price of it was probably only $5. So it doesn't even come close to meeting that threshold of, let's say, $1,000. So it doesn't qualify there. Number two, it is actually a physical asset. It's a physical possession, it's property that I have. So it does meet that criteria. And then the third criteria is the useful life. With something like a notebook, if I never touch it, it's going to last for a really long time. But realistically, I'm just going to use it for maybe 6 months and then it's done. It's no longer really useful for me other than maybe referencing it. So it really only meets the one criteria there in that it is a physical asset, it's physical property. But in accounting terms, I would not capitalize that asset because it doesn't have a long useful life and because the price of it is so low. Another example would be a desk. So I recently just purchased a new standing desk from Costco. I paid about $355 for it, and the desk is very obviously like a physical asset, it's physical property, and it should last for a long time, especially if I take care of it. So it does meet that criteria. But the price of $355, that is below my threshold of $500 or $1,000. And so therefore, because it doesn't meet that threshold, I'm not going to capitalize it as an asset, even though it is a physical asset and it does have a long useful life. And now just a couple examples of something that would actually meet that criteria. Let's say you are a photographer or a videographer and you buy a new camera for $5,000. That camera clearly is above that threshold of whatever you decide to go with, $500, $1,000 or $2,000. So it meets that criteria. It's also a physical asset, it's personal property or property of the business, and it should have a long useful life, right? Like that camera is going to last you more than 6 months. Ideally, it's going to last you at least a few years and then still even be useful after that. Maybe it's a little bit outdated, but it still should be functional. So in that case, that camera would be a capitalized asset, and not a business expense. Whereas the notebook I have or the computer desk, I'm just counting that as a one-off business expense. But with that camera, you're going to want to amortize it and have annual depreciation. And it's calculated with different methods depending on the type of asset, but maybe you are amortizing or depreciating that asset over the course of 5 years or 10 years and counting annual depreciation expenses for it rather than just a one-time business expense. Now, another example of an asset that would be a capitalized asset could be something like software. If you buy some type of software program for $5,000, again with $5,000, that should be above the threshold. It is a form of property, intellectual property, and it would likely have a long useful life, right? It's not just going to be used for 2 months or 6 months. So if you're using this software for your business for 5 or 10 years, that would meet the criteria where it becomes a capitalized asset and it's not just a one-time expense. And now one last example would be something like paying for radio advertising. So maybe you're paying $2,000 or $3,000 for radio advertising and therefore it's above the financial threshold criteria. But with the radio advertising, it doesn't really have a useful life. Like maybe you're just doing it for a month or 2 months or 3 months. And it's also not a physical asset, physical property or intellectual property. So in that case, even though it's maybe $2,000, $3,000 or $4,000, that's not a capitalized asset. That's just a business expense under advertising. So hopefully that makes sense. If you have more questions about that, I think it's a good idea to speak to an accountant on that topic because there can be gray areas or things that are treated differently depending on your jurisdiction or the type of business you run, or you can even base it a little bit on personal preferences in terms of what your dollar value threshold is.